All right, you got me?
Yeah.
All right, bet. Live and lit. Okay, let's get it. All right, so I'm gonna run through real quick. There's a couple of the old ones that played out, and just kind of get like an explanation of why it moved the way it did and why it, you know what I'm saying? It moved to the way that I thought it was gonna move, and I'll show you why exactly it did that. Basically, this is okay. Hey, one second, chill, fam, chill. Get back over there. All right, so I'll start with the what is this? This one right here, right? I had this one marked out for 2 weeks standing, right? And I said it was gonna do this. It started right here at the 0.686182, right? And it was rejected. It just had the first leg, this move and this move. This is the rest of the week, but I'll show you how and why it moved like it did, and it was still valid. All right. So I was expecting it to come down here and bounce off the 786 and then go back up, which it did, but it had a lot of selling pressure. So, but as long as this right here, I don't know if you can see my cursor or not,
Yeah.
but you see this right here, it never like that full body of the candle on the weekly because I went up higher time frame. It never broke the 786. It wicked it. You know what I'm saying? It came down to touch it and tapped it, and it
Yeah,
used
it's a retrace.
yeah exactly. But it used this quarter point right here, the
Mm,
10,000 as a level of resistance, and then it went back up. So
yeah.
so my entry was on point, like straight up on point. It was nasty, but it's just that it had that volatility, well, that buying pressure or the selling pressure that pushed it down. But if you go to a higher time frame and it's not closed past your entry or what you were expecting it to do, it still validates the continuous move. You see what I'm saying? So
Yeah.
my entry was right here, right? But I didn't take it because I wasn't really trading last week. I only took the UCAT trade, but
Yeah.
it's still valid. So I did go back and I researched and I looked at it like this one right here, AJ, boom, same deal, bro, same deal. It's just too sexy. It goes, it went down, it went up, hit the 618, right? That's my favorite pattern of trade is the gartley. Is 618. Boom. Hit that first leg. The retracement is 618. It go down. This looks like it retraced down to like what's this? Let's just say, just check it real quick. Another 618 retracement. So whatever, doesn't really matter. As long as it's in the band of 33, 38.2 and 88.6, it valid the move is still valid. So the reason why this isn't set up wick to wick is because this is a weekly chart. You see what I'm saying? And the same thing you just saw as when it's on a higher time frame, I use the body of the candles on the week on the weekly charts, and then on the lower time frame like the daily or the 4 hour, those those are more valid for like a nicer chart or a nicer pair like the UCAD. UCAD runs really smooth with harmonics, so you don't really have to jump to higher time frames. You see all this volatility in here?
Yeah.
That's why I like to jump to higher time frames, so it like moves the static out of it a little bit. You see what I'm saying? So, anyways, long story short, it had its retracement, it bounced down, and it went up. It wicked the 886, Now, if you were on a higher time frame, you'd have been like, well, if you're on a lower time frame, you'd have been like, okay, it hit the 886, so this isn't an improper or uh, a wrong gartley pattern, right? But it's not. You go to the higher time frame, boom, still validated because the body of the candle never closed above 886, and it's so sexy how it just taps it and then it moves down. You see what I'm saying?
Yeah.
So if you would have been in that AJ trade, like this is another trade that I called out like 2 weeks ago, and these higher time frames, like the 4 hour and the daily, it takes more time to set up and play out. But when it does, it's a nice move. You see what I'm saying? It it respected the hell out of that 7,500, and it just went straight down in that first TP, that TP1. Now, if you would have had it set exactly at the 73.279, then you would have missed out. It would have went back on you. Would have lost half your profit, right, by the end of that trade week. But if you would take into consideration the what is it called, the spread, and adjust for that, so you see what I'm saying? You got to adjust for the spread on each pair, because if you don't set it up like that, you will miss a nice chunk of your profits, or you will miss the nicest entry. You see what I'm saying? So that's why whenever I'll post mine, I'll post it right at there, but I'll move it 10 pips below or 10 pips above, so the execution of the trade is there. So it might up your risk just a little bit, but if you're using proper risk management, it's not going to be a deal. You see what I'm saying?
Yeah.
But the cool thing about the harmonics is the fact that if you use proper risk management and you can catch 2 trades like this a week, dude, you're netting 300 pips easy, and that on a single, not even a standard lot, that just on a what is it, a micro lot. That's $300. You see what I'm saying? Easy,
Yeah.
and that's just a full swing, the full move. Now, I will go and show you some more. This other one, if I can find it, it's like hella dope, bro. Like it's like harmonics to the T, and I think it's Euro.
So gold, you see it bouncing back down a bit right now, and then going all the way back up.
Who, me on gold? This one? Uh,
Yeah.
okay, let me see.
That'll finish that pattern because that's exactly what I see it doing too. I see it falling back down, retracing exactly like where you have it, and then I see it bouncing all the way up, and that'll fit with UJ bouncing up right now, which will make gold go down, and then UJ drop all the way down, which gold will do the opposite, which will be go all the way up.
I agree to that only because I don't think it's gonna come down here to the 886. I think it's gonna respect this area, this margin right here, this quarter point, and it's gonna come down. It's gonna break out. It's gonna consolidate for at least hour or two tomorrow, and then at the London session, I believe it's gonna break out to the fake out to the high, and then maybe retest to 61.8, and then come back down and clearly break out, and then tap this right here, this area of resistance, and then it's gonna make its way back up here, and then it's gonna wick this a couple times, because at that point it's gonna be the New York session by the time it gets up here, and it's gonna just consolidate in range, and then hopefully by the end of the Tuesday, or the start of Tuesday night or whatever, the next London session, it's gonna blade down. So there's pips to be had in here. That's what I like about gold, because you can trade gold all week long, and if you got a flow for where it's gonna go, you can cash out on gold all week long. Some people only trade gold. You know what I'm saying? Like you can make some bread on just watching
Yeah,
it.
I used to trade gold for like a good while. I was just hooked on gold. So I'm pretty good at trading gold too. I just hadn't traded it because I called it from what was it, 1180,
Yeah.
I called it going to 1500, and I said it was gonna take about 2 years.
Yeah.
But damn, bro, it literally took about like I don't know, a year and a half or so. Like fuck, man, that was a shitload of pips. So ever since then, I've been salty on gold. But yeah, it's in its new range already, so it's definitely gonna go back to 15 again and probably pass it. It's probably gonna pass that high. It's gonna go to 1550 for
Yeah.
sure again.
All right. Well, check here. I'll show you how I map it out real quick. I don't know how many. We ain't got no one in here. Oh, that's fine. I need to practice this anyways. This is how I look at the market, G. All right. The thing that I look for is a first leg, an initial leg. You know what I'm saying? Like that first driving force, which would be on this right here, would be this point right here going down. I don't count this. This ended this pattern. This pattern ended here. See what I'm saying?
Yeah.
And if you want to go to a higher time frame to kind of declutter the noise, because I just call that noise. That's nothing. That's not even a 30, 23 point something retracement. That's nothing. Like, well, yes, 38.2, whatever. But still, just go to the higher time frame, quiet some of the noise, right? Come over here, pull that right there. It can't get no nicer than that, bro. You see that 68.61.8. And as soon as you see that 61.8, that's how you know it's gonna be a gartley pattern, right? There's only one pattern that it could be is a gartley if you see the 61.8. Absolutely, every time. That's why I love the gartley. I love the butterfly, and those are the really only ones I really like. I'm actually starting to trade different type of patterns now because the other ones are continuation trades, but they still make just as much as these. But I just like these because there's structure and structure. So
Mm.
it's basically after you get this first thing drawn out, bro. All right, you go down, boom, boom, boom. That's your first leg. The next thing you want to do is take the Fibonacci extension right there. All right, and this is hold on. Let me just. Do you know anything about fibs?
Well, I mean, yeah, but I don't really use them.
Yeah.
Every now and then I'll throw it in there, but yeah, I don't really use them. But yeah, I watched a couple videos, and I mean, I know how to use them, but everybody uses them differently. Like I don't know, me and my boy Matita,
Yeah.
we mark them up differently, and then me and Rafa, we're always, getting into it too, because he uses some different numbers, and I'm like, yeah, those don't make sense with, you know what I mean?
No, I agree. I agree. Everybody's got their own style. The only thing that matters
Yeah.
if you in profit at the end of the week, dog. That's it. You know what I'm saying? Like that's the common
Yeah.
denominator. As long as you're making bread on however you trade, just eat. That's it.
Yeah, it's just trippy to me how like what everybody has different Fibonacci numbers like that. You know what I'm saying? Like different prices,
Yeah.
but like you said, it all plays out, and
They
it's like
do. Like,
trippy.
duh. I see your setups, and your setups. All it is a different language. You read it differently than I read it. That's it.
Yeah,
And at the end of the day, you in profit. I'm in profit. That's money, baby. Shit.
yeah,
Yeah.
yeah, man.
Right there. All right, this right here is the X, that's the A, and that's the B. All right. So basically, what it's saying is, right. I'm gonna show you how to measure it. To get the C leg, well, to get the D leg, this is how you get the D leg, the end point. And this is the. There's two ways to trade this pattern, bro. You can trade it the extension to the C, right? To the D, or you can just take it off the D. right? Because the D is going to be up here. The C, I'm predicting to reject off of this resistance because it lines up perfectly. But anyways, here, this is how you measure it. A, B, A. You take the extension and you go A, B, A. All right. Boom. And it can, on the extension, it can only be the 127.2. All right. You see where that 127.2 is? Right there on the 786, right? And the second point is the 786. So the fact that there's two forms of confluence already right there, that's why the gartley pattern is so strong. And that's why I always go right here. When it's on this D point, I always go heavy right there because I know there's nothing gonna stop it from going up. You see what I'm saying? So
Okay. So it ends at the 100 level. I was a little confused. I thought you were saying it ended at the 127 type stuff, but not. Once it breaks at 127, that 786, that's the confluence that shows that it's going to the 100.
hell yeah, that means that's it. That's nuts, baby. And then if this lines up with one of these quarter points, dude, I'm telling you, I take a 5 lot every time. I do not even give a fuck.
It's a sell type.
Huh?
Once it fills up the pattern, it'll be a sell on the 5 lot, or what do you mean?
I would take a sell on the 5 lot because my prediction right here is if this quarter point was right here and it lined up with that perfectly, that's 3 forms of confluence right there. So there's nothing that's gonna make this go up any further because you have resistance in the market, you have market structure resistance, you have resistance times 2, which is 2 forms on the pattern.
Oh, so you would sell it off of the 127.
Yeah, off the 127, but that's just the extension of this measurement right here. You see what I'm saying?
Yeah.
You got X.
Yeah, it'll rebound.
But all the structure is right here in this little thing right here. So you're measuring this leg, which is the 61.8, and you're taking the measurement of this leg. You're saying it's going to extend. It's going to retrace down. So the market is naturally it has to push itself back down, right? But you're measuring out this point and seeing where it's going to end up here. You see what I'm saying?
Yeah.
And as soon as after it's done, it's pushed down, it's going to come up and end its momentum right here. So basically, what you're saying is you're going to
take that 5 to that 127 and then sell from the 127.
Or you could just look. I'll show you the clone. I'll just clone it right now and tell you exactly where it's going to end at. You're going to be like, oh, shit. You can do it 2 ways. You can do it the clone version. Let me get rid of some of this. There's too much shit on this chart. All right, so that cloning that kind of validates this pattern right here. Let's see exactly where it's going to go. Delete that. It's this way. Yep. But 786. All right, cool. So basically, it's saying it's gonna be rejected in this range right here. I'm saying it's gonna be rejected right here, but the measurement is saying, the clone is saying that it's gonna be rejected right here.
Oh shit!
So you can literally measure from. And this is your C point. Like boom, boom. You know where it's gonna go from B to C and be rejected, and you know where it's gonna end right here.
Hey, it makes sense, bro. Because I even have it right there, 14,500. because it goes by like price, you know. So it'll be 1450, and then it'll go up to 1475, or it'll be what almost 1500 or so. And then from almost 1500, it'll 1485 is what you have on D. 1485, and then it'll rally back down, but ultimately do another wave up is what I think.
Oh yeah, hold up. Yeah. I'm not even done yet. This is
Yeah,
just
yeah. I saw your beginning chart. I saw you had like a wave down from that D, and then you're reaching that 100, huh?
yup. It's gonna go down from the D. Let me show you. The head the where you're supposed to take it at is from the D down, but I'll show you how I measure the TPs for the Ds, right? So you take the A to D. So A to X. A to D. A to D. You can do it from A to D or A to X. I do A to D just to be conservative because I've noticed the market it is definitely on an A to D type of move lately. Like it'll just barely tap that first 38.2 unless it has something else pushing it forward. Like let's say a red folder, and then it'll push it all the way down past the 68. Okay. Anyways, that gives me my TP1. And let's give me my TP2. All right, TP1, TP2, whatever. So the final rejection will be from here to there, and then here. If there's good momentum, it'll hit that TP2 right there. So that's the full move, right? That's how I mark up my charts. That's how shit goes down. So whenever you see like you be like, damn, how did you predict that? Like it's all this fucking extra shit. But at the end of the day, it works for me because I can just set it and I can continue my day and I don't have to really worry about looking at the charts because if I'm wrong, this is my stop loss right here.
Yeah, you have white stop losses. I saw that.
Yep, I'll set my stop loss up here. It's because it's
Yeah, because you're a swing trader. You have to.
exactly it's volatile. So I'm like, well, I'm gonna put it up here. It could not go up there or it can go up there. But if it closes above the 886, that means the structure has broken down in this pattern. So that means the pattern itself is invalid. So that's why I go to the higher time frame and I check if it could wick it. But if it never closes over the weekly on this, then the whole pattern is still valid. So, but yeah, dude, that's kind of what the shit that goes on.
Man, man, I hope bad, bro.
But you can see that one
So
right
that's
there,
gold. You were
8
gonna show me another one, right?
huh?
I got you like onto gold. I remember you were gonna show me something before I like got you on gold and shit.
Yeah. You're right. Let me see. There was one more. I have to show you there's patterns and patterns, bro. Like if you find a pattern inside of the pattern, like I'll show you how to map that one too. But it's fun. You can make bank on that one too because you're inside of structure, so you can map
Yeah.
out each leg pretty easily. I can't remember which pair it was though. That's ECAD. Oh, I think it's that one. Uh, nope. But this one right here, I had this one marked up from last week because actually it was daily. Yeah, that was 2 weeks from here to here. But I'm thinking by the end of this week, hopefully it's already back up here, and it's going to be rejected off of that for the start of the next week, and we can ride that at least 250 pips down. But that's like we're going to be waiting for that for another week or so, week or two.
Yeah, I think I was buying Euro AUD.
Yeah, Euro is in buy. It's in the buy market right now because it's got to
Yeah,
come all the way up here to hit the 786 to complete this pattern. So right now it just got rejected off that quarter point, right? So if you want to take the Euro odd for a buy next week and put it at a low lot, you could ride that up for the rest of the week. I guarantee it because
yeah,
there's nothing pushing it down. So after it clears this quarter point, which is 1625, then it will go all the way back up. But me personally, I would take it as soon as it starts, as soon as the market opens next week, and then just ride the what was it, the retest back up as well.
yeah. I'm gonna look for a re-entry on these Euros, Euro USD as well. That one's gonna pop off, bro.
Oh
I'm
yeah,
gonna look for a re-entry on them, and that trend line you got right there, it was not a trend line, but it looked like a trend line. That's exactly where it's gonna bounce off of.
I heard your Euro USD, bro. That's a buy for the
That's a
for the
hell of a buy, bro.
rest of the week. I would wait for it to fake back down, right,
Yeah.
and then go back up. It's gonna retest this zone because it's already on that quarter point right there. So you could take it from that quarter point on up, but that's a good 250 pips. Well, 200 pips right there, and that'll take you right up
Yeah.
to 38.2.
Bro, it's gonna be a good week, man. Hella pit.
That's what I'm saying, bro. Bro, it's structure on structure, and it's just how it is, man. Here, I'm gonna stop sharing. Damn, it's only me and you. It's all
Yeah,
good.
right now I'm telling you, these people, man, they want you.
Oh, it's all good, bro. Well,
Yeah, I mean, a couple times it's just been like 2 or 3 people, but usually like Wednesdays and Thursdays is when people usually log in.
yeah. I just got another busy week next week, so I figure I get this out there. I'm gonna wake up early tomorrow and mark up the charts, and I'm gonna put my stuff in there so that you guys know exactly how I'm looking at the market. But I'm not gonna be taking anything heavy. I'm gonna just be taking them all long term. I'm had everything set
Yeah,
up, and dude, go crazy with it. You know, have fun, shit.
yeah, I'm gonna go ham this week. Um, on the entries, like, bro, you just got me fucking excited on gold, on the euros. So that's just way more confluence to the setups that, because we went to that hookah bar with that boy Eric
Yeah,
and my boy Matita. We were over there marking up some charts, and that night we had that webby too.
yeah, yeah.
Before we went over there to hookah bar, we stayed up like 2, 3 hours almost, bro, going over these charts, and we freaking ended up coming up with some bad